It is a war between two billionaires. On one side you have Asia's richest man Mukesh Ambani, and on the other side it's world's richest man Jeff Bezos. Both are fighting for the ownership of one company, which is Future Retail Group. There's a common theme in every war: destruction of wealth and peace. And in this war also destruction is happening. Share price of Future Retail is down from its high of 375 rupees in the Feb 2020 to just 48 rupees in April 2021. And a lot of jobs are on the stake too. Let's go on this journey and see what is so special about a company which has a debt of almost $1.8 billion. It was almost on the verge of bankruptcy. And how can you stay away from destruction of your wealth and peace when two big billionaires or two big entities go against each other? This is India. India has one thing which no other country has except China. That is population. India's current population is 136.64 crore people, just 3 crores less from China. And by 2026, will overtake China to become a country with highest population. When there are so many people in a country, companies love to do business because of the simple fact: more the population, more the potential customers. Here both are at a war to dominate offline and online retail business in India. But what actually a retail business is? See, it is buying goods either from manufacturer or from wholesalers and then selling it to ultimate consumers, people like me and you. But what is so special in retail business that these two billionaires are fighting with each other? The total retail market size across India is $1.2 trillion in 2021. With rapid rise in internet users, India is expected to become world's fastest growing e-commerce market. Only e-commerce market size of India was $64 billion in the year 2020. And the way pandemic boosted the trend of e-commerce, this size is expected to increase to $84 billion in 2021 and then to $200 billion plus in the next 5 years or by 2026. Consumer retail business is something which is being used by everyone, either it's lower, middle or higher class. It's important for survival of mankind. In consumer retail industry, anyone can be your potential customer, and in a country with 1.36 billion people, all of them becomes your potential customers. And that is the reason why other big companies such as Walmart invested $16 billion by acquiring a 77% stake in Flipkart in order to enter into Indian consumer retail space. And Tata Sons recently acquired a majority stake in India's biggest online grocery company, that is Big Basket. Because why not? Everyone wants a share of such a big market. But what is so special in Future Retail that these two billionaires who have everything are fighting hard for just one debt-ridden company? For Reliance, they already are the country's biggest brick and mortar retailer, or a company with largest number of physical stores, 12,201 stores over 7,000 plus cities. It owns largest consumer electronic retail chain too, Reliance Digital. It holds exclusive partnership with brands such as Diesel, Tiffany, Superdry, Marks & Spencer and many more. It recently acquired Hamleys, which has 167 toy stores in over 18 countries, and NetMeds, which is an online pharmacy marketplace. But with the acquisition of Future's retail, wholesale, logistics and warehousing units, Reliance will be able to double its presence in a very short span of time. It will give Reliance a power which can even destroy Amazon's plans to conquer India's retail market. All this will give Reliance an edge which Amazon really can't afford. For Amazon, it's a very time-consuming affair to build an offline presence or warehouses to deliver perishable items such as fruits, vegetables, breads, milk, etc. To deliver daily groceries, a company needs to have warehouses and efficient supply chains very near to the area of service. Acquisition of Future Retail for Amazon will mean potential to go offline and will give them access to online delivery of groceries in over 400 cities via Future Retail warehouses and 1500 stores. But what happened between these two companies which led to so big chaos? Why Amazon filed a case against Future Retail and Reliance? Well, it all started back in August 2019. Future Retail was in urgent need of money. So to raise money, Kishore Biyani sold 49% stake in Future Coupons, an unlisted promoter group company which holds 7.3% stake in Future Retail. This means Amazon indirectly owns 3.58% stake in Future Retail. But there's a big twist here. It is now things will start getting interesting. A lot of times, these big companies often add few terms and conditions or clauses in the contract which give these big companies indirect control over small companies. And obviously, they do it intentionally. Same Amazon did here with Future Retail. At the time of this deal, Amazon set this condition that Future Group can't sell its assets to a list of companies, which included Reliance Industries also, which is where the Reliance and Future Retail deal becomes invalid. Kishore Biyani was in urgent need of immediate cash, so he accepted this deal. Then lockdown happened. Because major offline stores were shut down, a major cash crunch happened for Future Retail. To save the company, Biyani approached Reliance, which then bought Future Retail for 24,700 crore rupees. Now Amazon is arguing that this deal is a breach of 2019 contract between Amazon and Future Retail. And Future Retail is arguing that if Reliance deal will not happen, then they have to shut down all of their stores and it will directly impact employment of 29,000 people. Now the case is in the court and the deal is still pending. And let me tell you one thing, that here the Amazon side is slightly heavy because Kishore Biyani actually broke the clause of contract. But one good thing for Future Retail as of now is that it has started receiving operational support from Reliance, which will make sure that Future's inventory will always be filled and their employees will continue to receive salaries on time also. But what is the lesson here for us people? See, retail traders a lot of time jump into these kinds of companies with the hope that someone will come and save this company. And every time same thing happens, destruction of wealth of retail traders. When the announcement of this deal came, stock went to upper circuit and a lot of individual traders jumped into this company because they believed that this deal will prove out to be a multi-bagger. But from the next day, stock started going down and down and down, touching lower circuit daily. Everyone was shocked. Well, you must have heard this quote, buy the rumor, sell the news. But retail traders did the opposite here. They bought the news and got stuck into it. Smart money was aware about the clause which Biyani was breaking, and they knew Amazon will give a tough fight. So smart people sold everything when retailers were buying on happy news, and they got trapped. The lesson here is, do your research. Don't buy anything on the basis of news, and always put your money into good companies.